Joe Vitale, American Retirement Advisors, with this week's market summary from the Gradient Investments market update for the week ending March 24th, 2023. Let's get into stocks. Stocks were higher across the major global indices, with the S&P rising 1.41%. The Russell 2000 was up 0.53%, and the NASDAQ was up 1.67%. Now, overseas, the developed markets, which was the EFA, was up 1.59%, while the emerging markets added 2.23%. Now, within the S&P, the large caps were the best performers, while growth outperformed value stocks. So you've seen that going back and forth a lot in the last few months. Communication services and energy were the best performing sectors, while real estate and utilities were the laggards. We talk about diversification, having some small cap, mid cap, large cap, just a little diversification because you never know which one's going to do better every week. Fixed income, the Federal Reserve raised interest rates again last week by 25 basis points, which you know is 0.25%, to the range of 4.75 to 5%. They did give dovish forward guidance, signaling a forthcoming end to the hiking cycle, so we're thinking we're there now, we shouldn't go anymore. The benchmark 10-year Treasury yield dropped 1 basis point to end the week at 3.38%, which is 70 basis point drop from the year high on March 2nd. So it's down considerably. Commodities, talk about diesel fuel. We've seen how much that price has skyrocketed. It's actually dropped to the lowest price in over a year on a lower forecast for demand in the U.S. On Friday, the U.S. retail diesel prices averaged $4.25 per gallon, which is down 17% from a year ago. And U.S. government data showed diesel demand in the first 10 weeks of this year has been down 12.6% from the comparable period in 2022. And with the steep drop in demand due to slowing growth in parts of the economy, especially for heavy industry and construction, so that makes sense for the slowdown trickles all the way down. Economic data, existing home sales actually rose 14.5% in February from the prior month, well ahead of consensus expectations, and buyers quickly took advantage of the drop in mortgage interest rates in December and January. However, sales are still 22.5% below the sales a year ago, and the median price of a home is $363,000, which is down not even 0.2% from a year earlier. Both the manufacturing and service purchasing managers indices were stronger than consensus estimate in the last week's monthly reports, and manufacturing has been in a decline but proved stronger than anticipating, while services continue to strengthen. So it's a lot of just kind of seeing how everything's going in there. Let's get into some company news right now. Let's see how some of our holdings are doing. Accenture PLC, which is a G50 holding, reported revenue and earnings that exceeded consensus expectations, and management also raised guidance for this year's revenue and cash flow. Great news, right? Additionally, the board plans to return at least $7 billion in cash to shareholders through dividends and share repurchases, and shares were up 8.8% for the week. We talk about the G50 portfolios, 50 dividend-paying blue-chip stocks. That's why we're in those raising dividends, doing very well. They're not going to get hit as hard because of that, potentially, right? But they all go different ways. Let's get into Novo Nordisk, which is a G40I holding. Shares were up 10.5% last week after the U.S. Food and Drug Administration said that 2 out of 3 dose strengths of their diabetes drug Ozempic are readily available. And a shortage had been reported due to the high off-label use of the drug as a weight loss treatment under the name Wegovy. So the FDA also said full availability is expected by the end of March. That's it. That concludes this week's market summary. Thank you so much for being part of the ARA family. If you need to get a hold of us, please give us a call, 855-756-5700. Visit our Facebook and YouTube pages, share our newsletter, make sure, send us an email if you need anything. Make sure, market's always changing. Our team at Gradient is really trying to make sure that they're on the forefront, pivoting as we need to, doing all the corrections in the market, and make sure you're getting that commentary and kind of see what's going on. We're doing a lot of market reflections. So always trying to make sure that we're taking care of making sure you're properly diversified. So that's it for this week. God bless you. We'll see you again next week.